clothing retail industry, analyzing its performance, financial patterns, and how data analytics can guide better business decisions. Mm, Now, and the table of contents are introduction, data, descriptive analytics, predictive analytics, visualization and dashboard, conclusion, and references. Now I am going to the uh, telling about introduction. The presentation introduces a detailed analysis of the UK clothing retail sector, focusing on recent performance, key trends, and future outlook. The sector is noted as one of the most extensive retail industries in the UK. Clothing retail in the UK is one of the largest and most dynamic sectors in the country. It's constantly evolving due to changing customer preferences, the rapid growth of e-commerce, and ongoing supply chain challenges. Between 2015 and 2030, the industry has shown a compound annual growth rate of around 5.2% and is expected to reach a market worth of about 50 billion pounds by 2025. What's driving this change is social commerce, people buying products directly through social media platforms by 2028, and 10% of all UK e-commerce sales are expected to come from these social platforms. And I'm talking about key indicators. From 2025 to 2030, the industry is expected to grow at a modest CAGR of around 1%. However, in 2025, the market experienced a slight dip, declining from 52.1 billion pounds in 2024 to 49.2 billion pounds. Among all categories, women's clothing remains the largest segment as of 2025. There were approximately 10,202 registered clothing retail businesses in the UK, a small 0.3% increase from 2024, but still a 2% average decline per year since 2020. Market concentration remains low, with the Next Group PLC leading the market, followed by Primark and IDX UK. And I'm going to discuss about data. The data set includes financial data from 5 leading UK clothing retailers: Tesco PLC, Blueberry Limited, JD Sports Fashion PLC, Next Retail Limited, and H&M. H&M. Covering the years 2015 to 24. From the annual reports, I extracted several financial indicators and calculated 5 key ratios: current ratio to measure short-term liquidity, quick ratio to evaluate immediate financial health, debt to equity ratio to assess the leverage and capital structure, interest coverage ratio to check how easily a firm can pay its interest obligations, employee count to analyze workforce trends and operational scale. An Excel file was linked to store and analyze these metrics. And I'm going to discussing about descriptive analysis. Analytics. These include analyzing central tendencies like averages and median and variations like standard deviations. Through this, we can identify patterns. For example, which companies may maintain stable liquidity or which face rising debt levels. Companies with stronger quick ratios maintain better short-term solvency. Debit to equity ratios varied widely, indicating different financing strategies. Employee count trends reveal growth patterns, especially in expanding retail networks. And I'm going to do prescriptive analytics. Correlation analysis. Here I explore relationships between different financial metrics. A positive correlation between the current ratio and interest coverage ratio suggests that companies with stronger liquidity tend to handle debts more comfortably. A negative correlation between debt to equity ratio and employee counts might imply that highly leveraged firms are cautious about expanding their workforce. And I'm going to the telling about regression analysis. The regression analysis are these are showing uh, graphs and equity. And I'm going to tell about visualization and dashboard. The visualization and dashboard, here some graphs is there, current ratio and quick ratio. The current ratio 2015 to 24 and quick ratio 2015 to 23. And employees are your year wise and the interest coverage ratio also. Conclusion. The conclusion, the UK clothing retail industry remains robust yet volatile, while growth opportunities exist through digital retailing and social commerce. External challenges such as supply chain disruption and market competition continue to shape outcomes. Financial analytics of leading firms shows diversity in strategies and tolerance and growth potential, making industry both competitive and data driven. Market stability with moderate growth. The industry maintained an overall growth trend with a compound annual growth rate of around 5.2%, reaching close to 15 billion pounds by 2025. Through slight dips were seen in 2024-25 due to market corrections, liquidity and solvency patterns. Leading companies like Next PLC and Tesco PLC showed strong current and quick ratios, reflecting their ability to maintain liquidity and meet short-term obligations efficiently. Leverage references some firms such as various boards and H&M demonstrated higher debt to equity ratios, implying a stronger reliance on external financing for expansion. Liquidity as a leading predictor, liquidity ratios emerged as strong indicators of future financial performance, especially in sustaining probability during economic showdowns. Debt management as a critical factor, predictive models emphasized that high leverage could negatively impact interest coverage and growth potential, suggesting the need for prudent financial structuring. These are the conclusion, and I'm going to the references. These are the references I collecting from this topic, and thank you.